Good afternoon. RBI is expected to announce its monetary policy outlook on April 8th. We are going to discuss the expectations from the RBI policy. In its last policy announcement on February 10th in the last fiscal year, RBI had maintained status quo. It had basically expressed a view that a guidance that the CPI, the consumer inflation, should peak by February at about 6%, and thereafter inflation will start coming down. Economy is on the path to recovery, but Omicron was a point of worry in the world at that time, and RBI said that for now we are holding the accommodative policy stance. So what has changed between February 10th and April 6th when RBI has started its present meeting, and today we are talking on April 7th? The biggest change, of course, is Ukraine. But if we just divide the changes between global and domestic factors, then what do we get? Globally, post Ukraine, we saw commodity prices really shooting up fast as Russia is a very big producer. It's one of the top three producers of crude oil. It's the biggest producer of palladium, a big producer of nickel, of aluminium, of copper, and agri-commodities as well as fertilizers. Ukraine, in turn, is a big producer of edible oils, steel for Europe, and also wheat. Between Russia and Ukraine, they account for nearly 55% of the global exports of wheat that happen every year. Nearly 55 million tons is the export of wheat from the region. So Ukraine was the biggest issue, and as sanctions were applied on the Russian economy, we saw commodity prices shooting up. That has had a second order effect of leading to inflation going up in most of the developed countries around the world as well as emerging markets. Inflation has become a very big issue. US is facing 40-year high inflation. Europe is facing a nearly two-generation high inflation of 7.5%, something they have not seen in the last 30-40 years. That inflation has led to further reduction in the growth expectations for the global growth for this year and the next. We have seen the IMF and the World Bank as well as the country's central banks lowering their expectations for GDP growth for this year. And this comes on an already falling growth rate that we were seeing. Third, in terms of the fiscal stimulus availability, most countries were looking at reducing their fiscal stimulus this year after having run up huge amounts of fiscal deficits in 2020 and 21. The expectation was to normalize the fiscal policy this year. Monetary policy wise, most central banks were looking at hiking rates this year. The only standouts are Bank of Japan, which is still not facing inflation as per what it requires, and it has been defending its accommodative stance, and China, which last year had tightened a lot, and this year is very clear in the stimulative zone, in the accommodative zone, to ensure that its economy keeps growing in the face of all these challenges. Elsewhere, we have seen very fast interest rate hikes, with the Fed also now expected to raise rates by 50 basis points in its May policy meeting. It's already raised rates on March 16th in its last meeting, and we are expecting 6 to 9 interest rate hikes in 2022 to take a year-end interest rate for the Fed funds rate as high as 2.75, starting from a 0 to 0.25 starting point, we are expecting a 2.75% 2022 terminal rate for the Fed funds rate. That is the scenario globally. Geopolitical risk, geoeconomic risk with sanctions on Russia, energy insecurity, commodity prices going up, inflation going up, growth coming down, and expectation of tightening by most central banks around the world, led by the biggest bank, the Federal Reserve. How does RBI see the domestic scenario? Our economy is in good shape. The recovery is good. The tax collections are very good. Corporate taxes are up 58% year on year. Personal direct taxes are up 47%. And GST has hit an all-time high of 1,42,000 crores in March of 2022. So even the indirect taxes are doing very well. The petroleum-based taxes have also been adding to the central government and state government's coffers. So overall, the revenue position of the government is strong. But against this, the expenditure also is quite high because the food subsidy bill is going to go up. The Food for All scheme has been again extended through this year also, which is a very good move. In fact, even IMF took out a paper yesterday where they have really praised the Indian government for ensuring that there were no starvation in India by a very far-sighted and a very efficient food distribution mechanism whereby food grains were reached to the common people during the pandemic to ensure that everybody had adequate nutrition on their table. So that has been a good point, but that has a subsidy bill attached to it. Second, fertilizer prices are going up because of the Russian raw materials not being available that easily now. So globally, fertilizer prices along with agricultural commodity prices, both are going up. So the government's expenditure is up. Government's revenues are definitely up. Divestment, disinvestment revenues were lesser than expected. So there is a little hole there, but we are expecting the LIC IPO to come in May and to ensure that this year's fiscal deficit targets are met. There is pressure on the current account deficit also, largely again because of the crude oil import bill, which has really shot up. It is up 40% in the first quarter itself. The oil prices are up 33%. Plus the rupee depreciation. We have seen RBI using up some of its FX reserves to shore up the rupee to ensure that there is an orderly depreciation, unlike what we have been seeing in the neighborhood with the currencies of our neighbors falling quite fast. So that is the scenario. In this scenario, what is our expectation? Our expectation is RBI stays status quo, no change in interest rates expected on April 8th, no change in the monetary policy stance for now. It will stay accommodative. Third, worries on the inflation front. What was expected as a spike in February and thereafter the inflation would have gone down. That was what RBI had forecasted on February 10th. Now on April 8th, we'll have to deal with inflation which could stay high for 5 to 6 months more, if not for longer, till the oil prices stabilize, till the oil market itself stabilizes. So inflation will be persistent and it is a thorn for RBI to handle. Growth will be reduced. The growth forecast will be reduced. We have seen the ADB numbers, the World Bank numbers, the IMF numbers, all reducing India's growth rate for this year slightly on the back of higher commodity prices. Since India is a very big oil importer, that is, higher oil prices will flow through into the economy and lead to some demand destruction. Given that this is already happening, RBI might not be keen to further accentuate the demand reduction by raising rates in a rush. I think they will hold on for now. Also, the LIC IPO is coming up in May. I don't foresee the government or any of the regulators upsetting the apple cart till the LIC IPO has been uh, successfully handled and the disinvestment proceeds have come into the treasury. I'm not really foreseeing much in terms of regulatory change being done before that. Finally, on the liquidity front, RBI has been quite proactive. They have pulled out liquidity from the markets. We are expecting that to continue. So, in short, expectation tomorrow, status quo. We have seen a good bounce back in Bank Nifty today, whether that's expiry led or whether that is some buying in expectation of RBI not acting tomorrow. We'll see, we'll get to know tomorrow. But today there is definitely buying in our stock markets, in the banking sector. From a negative, it has gone into positive, and there is strength. So let's see what comes tomorrow. That will show us exactly what is happening today. No expectation on a rate cut or policy stance change. Inflation expectations will be anchored higher. The growth in GDP numbers will be lowered because of the commodity prices and the supply chain disruptions. Third, there will be worry expressed on the global situation, geopolitical as well as geoeconomic. And finally, looking ahead, RBI will say that we will look at how the other central banks are raising rates and the impact on the overall demand. And if the commodity prices are persistent, we might be forced to raise rates somewhere down the line. I am personally expecting around June, RBI might change its stance to a more tightening stance, and then within this year, we could see 2 to 3 rate hikes coming in. But RBI will be slow and steady. They don't want to rock the growth momentum. We need growth in a very poor country like India. Our rates are already high. So if they see inflation getting controlled in the next 6 months, they might not act so harshly and might stay more on the side of growth. That is the expectation. Any status quo policy tomorrow will be positive for the markets. Let's wait and watch. Tomorrow also I'll be back to update you on what were the key points in the RBI policy. All the very best. Wish you all success in your investments and in your studies of the markets. Thank you very much for watching.